If you want to own the biggest winners of the 21st century, the Nvidias, the Apples, the Microsoft of the world, you don't need a US bank account or a complicated currency exchange strategy. All you need is a way to track the S&P 500 from right here in Canada. For years, Vanguard's VFV has been the celebrity of Canadian indexing world. It's the one everyone always talks about on Reddit and TikTok, but in the background, a massive contender from BlackRock has been quietly winning over savvy investors who prefer the institutional power of iShares. You guessed it, it's called XUS. It is the iShares Core S&P 500 Index ETF, and as we move through the year, the debate over XUS versus VFV is reaching a fever pitch. People talk about it quite a bit. Whether you're checking the XUS stock price for a potential entry point, or you're wondering how its management fees compare to the competition, you've come to the right place. Trust me. Now, stick around because we're going to break down the XUS holdings, the recent stock split, and the unhedged math to see if XUS is truly the best way for you to own a slice of the American dream using Canadian dollars. So let's get right into it. The S&P 500 is more than just a list of companies. It's the ultimate benchmark, really, for global economic success. It represents the 500 largest, most profitable companies in the United States. Historically, this index has been one of the greatest wealth-building tools ever created, outperforming most professional stock pickers over the long run. XUS is BlackRock's flagship vehicle for the index on TSX. Recently, XUS made headlines in the Canadian investing community by also performing a stock split. This move was designed to make XUS price more accessible for those who cannot buy partial shares. And while the split doesn't change the underlying value of your investment, all it is like cutting pizza into more slices, it does make it significantly easier to manage your portfolio, especially if you're using a broker that doesn't offer fractional shares. So that's something to keep in mind. So what is XUS exactly? It's an exchange-traded fund, ETF, managed by iShares, a division of BlackRock, the largest asset manager on the planet. Its objective is very simple, to replicate the performance of the S&P 500 index, net expenses. So when you buy XUS, you're actually buying a wrapper. That's all it is. XUS primarily holds the US ETF IVV, which is iShares Core S&P 500 ETF. It has a highly efficient structure because IVV is one of the most liquid and low-cost funds in existence. So let's look at the specs now. With XUS, you get instant exposure to the Magnificent 7 tech giants, but unlike Nasdaq 100 ETF, you also get New York's biggest banks, Texas oil titans, and retail kings like Walmart and Costco. XUS is unhedged. This means BlackRock does not try to cancel out the fluctuations between the Canadian dollar and the US dollar. Furthermore, it trades in Canadian dollars on TSX, meaning you bypass the 1.5% to 2% currency conversion fees that most Canadian banks will charge you when you try to go ahead and buy US stocks. Now let's look at the competitor. So this is a question that really dominates every Canadian investment forum when discussing this too. VFV versus XUS. Which one really deserves your hard-earned cash? They're so similar, remarkably so. But there are three distinct reasons why an investor might choose XUS over VFV. Let's look at the fees first. Both are very cheap, but XUS is often the leader in driving costs down. With a management fee of just 0.08% and a total MER, which is the management expense ratio, of only 0.09%, you're paying pennies to own the world's best companies. Second is the accessibility factor. Following the recent split, the XUS stock price sits at a much lower per share cost than VFV. If you have $100 left over in your account at the end of the month, for example, you can buy a full share of XUS. With VFV, you might have to let the cash sit idly if you can't afford a full share and your bank doesn't offer fractional shares. And lastly, the ecosystem. Some investors prefer the iShares ecosystem because of its massive liquidity and the role as the gold standard for institutional pensions and investors. Okay, what about the dividends? Let's take a look. Does XUS stock pay dividends? Yes, it absolutely does. However, it is important to manage your expectations. People will very often ask, is XUS a dividend fund? And the answer is no, very much not so. It's a growth fund that happens to pay a dividend. But unlike the monthly payout of a Canadian fund like VDY, XUS typically pays semi-annually, usually around about June and December. The yield actually is nothing to write home about. It hovers around 1 to 1.3%. And something very important is the tax consideration. Because XUS holds a US asset, there is a 15% foreign withholding tax on the dividends if held in a TFSA. I wouldn't let that scare you. That's normal. The tax only applies on the small dividend and not your total gain. However, in RSP, for example, this tax is often bypassed due to international tax treaties. So this is something to keep in mind if you want to get into the nitty-gritty of things. Now let's look at the math. A very common point of confusion is whether to buy XUS or its hedged sibling XSP. To understand this, you have to understand the currency cushion or currency hedging, which is quite interesting. Imagine the US stock market stays perfectly flat, 0% return. However, a global crisis occurs and investors flock to the safety of the US dollar. As a result, the USD actually rises 10% against the Canadian dollar. In XUS, which is unhedged, your investment is now up 10%. Simply because your US assets are now worth more when converted to Canadian dollars. In XSP, which is a hedged ETF, your investment would be at 0%. Over the long term, the Canadian dollars has historically weakened against the US dollar. And the cost of hedging, which is the insurance policy that usually get baked into the MER, can usually eat at your returns. And this is why most investors stick with the pure exposure of XUS. So that's something to think about, absolutely. One extra risk that you have to take that might pay off or not pay off. To summarize, XUS is a foundational investment. It's the bedrock upon which you build your portfolio. It is fairly cheap, diversified, and it gives you a front row seat to most innovative economy on the planet. If you're looking for a way to stop home bias or hedge against it, the mistake of only owning Canadian stocks, XUS is your ticket out. Whether you choose iShares or Vanguard, that's up to you. It often comes down to personal preference, but with the recent split and very low fees, XUS is making a very loud case for being one of the better S&P 500 ETFs in Canada, if not the best. Anyways, guys, thank you for watching. I hope this deep dive into what is XUS and the XUS versus VFV debate helped you clear the air a little bit. If you found the value in this breakdown of XUS price and its tax implications, for example, hit that like button. It helps others find the channel, of course. It just tells YouTube that my video is somewhat watchable. Are you a Vanguard for life investor, or would you move your money into iShares XUS? Let me know and leave the answer in the comments below. By the way, I'm not a financial advisor, as you know. This is for educational purposes only. I give you my thoughts, but not financial advice. Please conduct your own research or consult a professional before making big investment decisions. Anyways, guys, thank you so much for sticking around until the end, and I'll see you in the next one. Take care.